consume all the silver. And so that's really, really big bullish demand on silver.
Talk more short term then, and then I'm going to get to another very interesting chapter in your book. Let's talk more short term. All right, for those of us who can't wait 8 years out, what's going to happen to silver in the intermediate term, you think?
So I think that given the amount of industrial demand and the rise in applications, solar is the single biggest use for silver. 11% of all silver supply goes to solar alone. And that's been growing. The last year it was up 13%. It's forecast to grow another 12% this year. And the International Energy Agency forecasts over the next 8 years that electrical output, so electricity produced by solar, would be up 8.5 times current levels. So if solar currently uses 11% of all the silver supply, and solar capacity were to be up by nearly 9 times over the next, say, 8 years, technically it should consume all the silver. And so that's really, really big bullish demand on silver.
I know you're very bullish on silver in the near term and long term. I have nobody here to debate you, so I'm just going to play devil's advocate here, just for the sake of argument. Let's suppose we get a recession next year, and a lot of people are saying that we will have one based on a number of indicators that they're looking at. Now, in the past 3 recessions, 2020, a very short one we had, 2008, and 2001, in all 3 of these economic downturns, contractions, silver went down by a few percentage points. Not by a lot, but by a few percentage points. Silver typically does not perform well during a recession. One could argue that the economic conditions now are not conducive to silver because of because, like you mentioned, its industrial applications. The solar panels and the EVs, they take time to materialize. We're not building infrastructure right away. And in the intermediate term, well, we've got maybe a recession looming, and so industrial demand might wane a little bit, which would weigh down on demand for silver, and so that's probably not great for the price. How would you respond to that?
Yeah, I mean, there's no doubt that, and that's probably why we're seeing silver, we're seeing pressure on the silver price, and it's at the low of its range over the last 2 years. It's interesting to look at what it costs to produce an ounce of silver. And
well, First Majestic Silver has about 16. Their all-in sustaining cost about $1670 to 18. I just looked at their statements last night, so I'm using them as an example.
Sure. So the industry average is about $18 for all-in sustaining cost.
Yeah.
So at $22, your profit margin's about 16 to 20%. That's not great, which means that there are less and less companies that would be interested in mining silver, meaning that would put pressure on the supply.
Can you then make the statement that the floor is the all-in sustaining cost? Because lower than $18, there's no incentive to turn on your drill.
Exactly. I mean, it doesn't mean that it wouldn't be that a temporary floor would not be below that, because we've seen that in uranium. They've been mining uranium at a loss for years because you can't just shut down a mine that easily. And having to put it on care and maintenance is costly as well.
Oh, I see.
So, temporarily below 18, anything's possible. We went to 12 in 2020, but we also ran up to nearly 30.
I think that's a very important point people need to understand. You can't just turn on and off your production like a light switch. It's costly to turn it off.
Absolutely.
And yeah. Okay. But suppose silver does fall below, let's say, the all-in sustaining cost of producers. What's the logical next step after that? I mean, you have decreased production, perhaps, and that brings supply back to equilibrium.
So if silver goes below cost of production, start buying because it can't stay there long. And
it's very interesting because the cost of production has gradually increased because of inflationary pressures, wage pressures, materials. And so what we're really seeing is inflation, which is completely independent of the silver price. It just happened because of a lot of reasons. Inflation is really putting a floor on the silver price. Could you make that statement?
I would say that industrial demand and the growth in industrial demand, in my view, is what's keeping a floor and a rising floor under the silver price.
Right.
And that investment demand is going to be the wild card. It is going to be the big driver in considerable upside.
Okay. I want to spend a few minutes talking about the history of silver because that's important. That's not often talked about in a lot of media. You wrote in your book, in bold words, I'm just going to read the bold paragraph here. Silver has been used by every major empire, starting with ancient Greeks up to 20th century America. Okay, we don't have time for 5,000 years of history,
Right.
but give us your key takeaway here.
So silver is has been the most used currency in history for transactions. It's very simple. It's been the most. If you go back far enough, so about 2,500 years, the ancient Greeks developed fashioned the first coins, and then a few hundred years later they created the Athenian drachma.
Yes.
So that became the first truly international currency, and it's been part of our money for 2,500 years. So it's only in the last 60 years or so, since the mid 60s, that silver was taken out of our coinage. So if you look at, say, 60 years versus 2,500 years, where silver's been part of money, my money's with silver.
Yeah. You have an interesting diagram here. It's a U.S. certificate, silver dollar certificate, dated 1935 in your picture here. I've actually been shown one at another conference recently in Vancouver.
Right.
Somebody showed me a silver dollar certificate dated back in the 50s.
Right.
I'm looking at it was phased out in 1964.
Right.
So it wasn't actually that long ago that in the U.S. we had actually government-backed fiat money that could have been redeemed for silver.
Exactly.
You could have gone to a bank or the treasury and asked for an equivalent of $1 in silver.
Exactly.
And we don't have that anymore.
We do not.
Why do you think that was phased out?
Well, it makes it a lot easier to print money. There are no restrictions, and it allows central planners and governments to feed their pet projects and expand the money supply. It's wars are costly.
I asked that because 1964 was before the end of the Bretton Woods.
Right.
Bretton Woods ended 1971.
Right.
And so, I don't know, the government was just thinking of phasing this out and then ending Bretton Woods altogether. Maybe it was a multi-year plan. But it did occur to me that those were two separate kind of
Sure. It
events.
did precede it, but it was only 6 years earlier. So, if I had to guess, my bet would be that it was part of the same plan. And being able to remove silver from the coinage, again, made it easier to produce money that didn't have the same value.
Do you think digital currencies, central bank digital currencies, and a digital fiat, digital dollar, is the next evolution of money? Could it be a replacement for what silver was for thousands of years?
I think it's the replacement for the money we have now.
Okay.
I think that a silver or a gold-backed digital currency would be the ideal, because you would have the limits on printing. You'd have a hard asset backing your currency,
Yeah.
and you'd have the ease of transaction and the speed of transaction. You'd really have the best of both worlds.
In your book, you talked about the history of silver and the origins of silver being used as money, and you gave a lot of historical examples going back all the way to the Greeks, the Song Dynasty in China.
Right.
I'm not going to go through all of them. It's chapter 1 in the book. Did you talk about where silver is being used today as a monetary metal? Where can I go today to buy something with silver? Where would it be accepted as legal tender?
Nowhere that I can think of.
Why is that?
Because it's been removed from coinage. People have become accustomed to using fiat dollars, which is the currency of basically every nation. Not dollars, but some sort of a fiat currency. Yeah. And but I think we will go back to that in some form. I'll give you a really interesting example. I was at the Metals Investor Forum a couple of days ago. Yeah. And a mining executive came up to me. I had my book available, and he said, this book looks really interesting. Would you accept an ounce of silver for it? And I thought, wow, that's great. It had never even occurred to me, of all people who wrote about this, that the book was close to the equivalent of an ounce of silver. Right. And then I thought about it, and I said, well, I do know that if you have to buy an ounce of silver right now, a Canadian maple leaf, for example, you're going to pay around $35 Canadian, and the book is retailing for $35. So I said, sure, I'll take your ounce of silver in exchange for the book. I'll do that all day long.
You might have more upside, you know.
Exactly.
Exactly. You might earn money on that transaction somewhere down the line.
So the point is, I think that we both feel like we got the better end of the deal.
Did you accept it?
I absolutely did.
Okay.
And I think he may have gotten the better end of the deal in the sense that there's really a lot of, I think, interesting but also very, very practical information in the book in terms of how and why to invest in silver and how to build your own portfolio.
Like they say, knowledge is priceless.
Absolutely.
So yeah, definitely maybe a book is worth 100 silver coins. Now, Peter, let's talk.